America's threat of possible airstrikes against militants in Iraq rattled global equity markets and fired up the commodity universe. The Lal Street could not escape the torment either. The possibility of losing lucrative oil fields in Baghdad to militia has put oil on the boil. Global crude prices are soaring, with Brent touching its 9-month high at over $114 per barrel. And fuel retailers in India, IOC, HPCL and BPCL, took this spike on the chin, down by over 7% each in intraday trade.
If the increase is sustained, there will be significant amount of impact of that on our current account as well as overall BOP and to some extent on the price levels also.
Iraq is the second largest oil producing country in the OPEC region, second only to Saudi Arabia. India, which imports 80% of its crude requirement, relies heavily on Iraq for procurement. In 2013, India increased its exposure to Iraq to over 26 million ton of oil equivalent annually, which is why any civilian unrest or militancy control over Baghdad will directly hamper crude supplies to the rest of the world.
With the new government in place, there has been talk of oil subsidies being phased out. In that case, a rise in prices internationally would be allowed to kind of come into the domestic market also, in which case we could see demand contracting in response to higher prices.
Indian fuel retailers had just begun to breathe easy, considering they've all inched closer to complete market-linked diesel prices, a step that will substantially ease the subsidy strain on the fisc. But it looks like the cheer has been delayed, at least for a while, especially if crude prices do not stabilize in the near term. For now, the news from Baghdad is bad. Nitya Balakrishnan, ET Now, New Delhi.